The Indian banking sector is facing a significant deposit crunch in the financial year 2024 to 25, which has raised concerns about the sustainability of the current credit growth and the potential impact on the economy. Loan-to-deposit ratios on the rise. The loan-to-deposit ratios, LDRs, at Indian banks have been climbing, indicating that loans are growing faster than deposits. This trend is particularly evident in public sector lenders like the State Bank of India and Bank of Baroda, where LDRs have increased annually since fiscal 2021. Private sector lenders such as HDFC Bank have also seen sharp increases in their LDRs, especially following mergers. A key factor contributing to the deposit crunch is the shift in investment preferences among Indian investors. Post the COVID-19 pandemic recovery, there has been a surge in investments in asset classes like stocks, mutual funds, and real estate. This shift is driven by India's status as one of the world's fastest-growing major economies and has resulted in trailing deposit growth, household stress, and economic recovery. The lower deposit growth is symptomatic of household stress, particularly in the lower economic strata. This stress is a consequence of the K-shaped economic recovery, where some sectors rebound sharply while others continue to decline. The weak job market and contracting real wages have exacerbated this stress, leading to a lower propensity to save and hence lower deposit growth. Uncollateralized lending, which is indicative of rising household stress, has led the increase in loan growth. There are fears that such loans could turn sour, which is a concern for the banking sector. The Reserve Bank of India, RBI, has also raised alarms about the surge in personal loans, which have increased to 35% in 2023 from 25% in 2007. Implications for the banking sector. The deposit crunch poses several challenges for the Indian banking sector. Competition for funds. Banks are competing more aggressively for deposits, which could lead to higher deposit rates and, consequently, squeezed margins. Moderation of credit growth. If the deposit growth remains tepid, the strong credit growth could moderate to 12 to 14% in fiscal 2025. Stressed borrowers. The increase in uncollateralized lending points to the potential for an increase in non-performing assets if the economy faces headwinds. The deposit crunch in the Indian banking sector is a complex issue with multiple underlying factors. It requires careful monitoring and proactive measures to ensure that the banking sector remains robust and capable of supporting the economy. The sector's resilience will be tested as it navigates through these challenges in the coming year.